Hello, Maverick traders. Welcome out to your market roundup, March 4th, 2024. Corey here with you. Let's dive in. We're always going to take a look at meaningful news in the markets, what's moving markets in commodities. Specifically, we're going to focus a little bit on gold today. We'll talk technicals of the markets, why we think we've been in this exhaustion high move, some exhaustive type of patterns happening in some of the most ballied about names, the Nvidias and Dells and all these things that have been exhausted to the upside. We'll highlight some bullish and bearish ideas as well.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
All right, so as we take a look at the markets, kind of a quiet day, but we did fall off of the highs. So we tried to rally early on, and then we proceeded to fall off of those highs. And so it was a little bit of a reversal, a small long upper shadow in the case of the S&P. We'll look at that more closely, but as you can see, Dow, S&P, NASDAQ, Russell, all basically flat. Oil had a rough day, down 1.2, gold up strongly, up 1.6. And gold is interesting because we've now broken out to new multi-year highs. This takes us well above the 2011 high and above the recent peaks of the last few years. So gold prices have truly broken out. Bitcoin may be on the cusp of that. We topped 76 or 67,000, as it nears the 2021 highs. Advanced decline line, about 6 out of 10 stocks going down. And the 50-day moving average still more bullish than bearish. About 6 out of 10 stocks are still above their 50-period moving average. So I talked about the S&P and the NASDAQ in these charts kind of falling off the highs. Now this is not a big reversal, but if you were to look at that candlestick, you can see it's a doji-like candle, meaning we opened and closed at about the same price, but we had traded up. See how the shadow on the upside is longer, meaning we tried to rally and then we fell off and gave away those gains. And so this is a shooting star candle. It's basically, hey, we've kind of fallen off a little bit from a momentum perspective. You will often see long upper shadows preceding a decline. This long upper shadow, I suspect, will be just before the decline. So in the short term, over the next couple of days, I would expect more declines in equities, just from a very, very short-term perspective, just over the next couple of days. In the NASDAQ, similarly, kind of fell off of the highs, started higher, finished lower, and I'd expect a check back of a few more days. Now, on a broader perspective, I think the market could be in a little bit more trouble because things like Apple and Google that have not been participating really got slammed. And these have really weighed down the market. We talked about Google. I highlighted that as a bearish idea maybe last week or 2 weeks ago. I don't remember exactly when, but recently, and talked about that the temptation would be to come after something like Google that's been left behind. And my argument was that's usually bad form, that you should continue to look to be bearish and short Google. And sure enough, we're breaking to new lows as we speak. This heat map, you can see a little bit more red over here in energy, maybe in healthcare, and certainly deep red in Tesla as well. Now, market outlook, in the very short term, I would be more in this camp for the rest of this week. I think we give a little bit more back in the broader equity markets. Frankly, I'm a little concerned about the markets continuing to trend to the upside. I think this is exactly where we see a corrective phase. That does not mean that the bull market as a whole, the kind of quote-unquote secular bull market is done. We could still be in a long-term uptrend, even with a few weeks of downside corrective behavior. Some sort of correction, sideways consolidation, I think is imminent. That's the way I see it. So I'm taking a little bit more where I've been very, very bullish for weeks on end. I mentioned this just starting last week and into this week. I've kind of changing my tune a little bit and want to be more selective and more cautious with markets. So let's highlight some bulls and some bears and let's see what can make sense in both directions. On the bullish side, Novo Nordisk just broke out to new highs. It has already gone through a multi-week consolidation. So this is the type of price action that I would trust a little bit more, where equities have been running higher. This consolidated and rested, and now we're starting again. I don't think there's a ton of upside, but I think we can continue to project a little bit more upside and conservative upside targets. Do I think that markets can weigh it down a little if they give back some ground? Sure, the market will probably weigh down everything if it starts to come down, but that's one that I would consider. I would also consider just emerging markets. Some of these international markets look better than US based markets. Again, we're consolidating after a run higher, and I think this will outperform US equity markets. This one's not ready yet, but I think a breakout to the upside probably is coming sooner rather than later. On the bearish side, I specifically wanted to scan for stocks that have corrected back up for the past couple of weeks, but are still below their 50 period moving average. And PayPal popped up on the list. Notice how it was repelled and resisted at the 50 MA. Notice the long upper shadow candles that we talked about and starting to roll over. Here's another where I would anticipate a move back towards this 55, 56 range in the shorter term. And then again, on my scan, I wanted something that has corrected for a few weeks up, but is still below a downward sloping 50 MA. And UPS also popped up on the scan, also had the long upper shadow candle type. This would be basically, this scan is sort of the opposite of this one, where you have the long lower shadow and it held the 50 MA. Notice the next couple of weeks to the upside. Here you have the long upper shadow and failing most likely against the 50 MA. I'd expect the next week or two to be back and fill. So UPS, PayPal, those specifically popped up on the scan that I was looking for, which is things that have corrected to the upside but are still in bearish market trends. The market as a whole, I think, is in this blow off top, and usually what you see in that phase are some really, really wild moves. I would classify Nvidia. I would classify Dell. I would classify even something as stable as Berkshire Hathaway. Some of these big names, widely followed, Bitcoin and so forth, you're getting that speculative chase, that short covering, short squeeze rally that tends to happen at the tail end or the ninth inning of the baseball game. Powell testifies on Wednesday. We've got non-farm payrolls on Friday. And then, even though earnings season has mostly passed, we're still going to have companies reporting: Broadcom and Costco, CrowdStrike, Target, Ross Stores, and others still to report earnings this week. Hope you enjoyed this market roundup. Everyone have a great, safe week, and we will see you next time. Goodbye, everyone.